Hi there, welcome to Kneppy Invest. Hope you're having a wonderful day, and if you're not, maybe this video can brighten up your day, or maybe not. Who knows? But I will be bringing you a company that I didn't know a lot before I started a little bit of research in regards to this video, and that company is Vonex. There was a comment recently in regards to this company about a month ago that their IRR compared to the valuation looked quite attractive. So because I didn't know much about this company, I initially thought Vonex had something to do with software as a service, but they don't. They are a telecommunications provider. And in this comment, they mentioned that when you look at the annual recurring revenue, because this company does provide that information, even though they are not a software company, and the valuation of the company, it does look amazingly cheap. But I don't necessarily agree that Vonex should be using annual recurring revenue. And when you do look at their gross profit margins, it is significantly lower than what you would find in software as a service companies. So before we get into the crux of this video, and I will be looking at their Appendix 4C that they did release for the September quarter. And I was actually thinking of doing a video on Vonex simply because they are operational cash flow positive, or they were in the most recent quarter. So I will be focusing on that Appendix 4C, looking at financials, looking at the cash receipts history, and then at the end of the video, I'll be looking at the chart for the company. So let's get into it. But before we look at their financial state and their financial numbers, just a few facts in regards to Vonex. As I've already mentioned, Vonex is a telecommunications provider. They sell mobile, internet, fixed lines, hosted PBX, and VoIP services primarily to SMEs. They also have a wholesale services division branded as 2SG Wholesale, and they're also into residential. But their biggest sort of divisions or verticals are the SME business and the wholesale business. And just some of the things they are provided or do provide were given in the most recent AGM. I did have to look far and wide to figure out exactly what they do because their website was no help. But thankfully, the AGM did provide some clarity about exactly what Vonex does. And it's right to say they are a telecommunications services provider. Vonex was apparently founded in 2004. I did find it hard to find that information. A lot of times you will find the history of a company on their website. So you'll go back through time to see where they're founded, or when they were founded, and by whom. Unfortunately, I did not find any information on Vonex history on their website. I did find some mention somewhere that they were founded in 2004. And even though they have been a company for about 17 years, they're only listed on the ASX in June 2018. The CEO, Matthew Fay, has been with Vonex since 2013. He also has a 2.1% stake in this company. A little bit of skin in the game, but not a lot. And the major shareholder in Vonex is Regal Funds with a 9.7% stake. Now, I do hear a lot of good things and bad things about Regal Funds. I have no opinion about fund managers whatsoever. When you look at the valuation, market cap of Vonex at 11 cents is $36 million. And when we have a look at the next slide, we'll look at their financial numbers, including the annual recurring revenue that Vonex does provide. And that might be the reason why some people might be thinking this company is amazingly cheap. And the ticker code for Vonex is one of my favorite ticker codes, VN8. Now let's have a look at their financial year 21 numbers, comparing it to their financial year 20. And straight off the bat, we do find something positive. Revenues increased by about 50% from 12.8 million to 18.3 million. Now, Vonex is an acquisitive company, and what I mean by acquisitive is they do quite a few acquisitions. So that could have been helped, that increase in revenue, by some acquisitions, but that is a good start. Now, that good start has been tempered by the fact that their gross margins did fall from 37% to 30%. Now, typically, when I look at a company that does provide annual recurring revenue, it's typically more than likely it's going to be a SaaS company, that sort of thing. And usually SaaS companies have fairly high gross margins, sometimes over 90%. So Vonex has fairly low gross margins. That's maybe one of the reasons why this does look amazingly cheap if you do focus on that annual recurring revenue that they do provide almost every quarter. Now, Vonex was not operational cash flow positive on a yearly basis, but they're nearly there, only operational cash flow negative by $300,000. They were unprofitable, loss-making by $4 million in financial year 21. They have $3.7 million of cash on hand. And when you do look at the price to sales ratio and the annual recurring revenue to value ratios, this does look quite low. So PS ratio is at 2. Annual recurring revenue is at about 31.7, which means the price to annual recurring revenue is almost 1. And that does seem really low for a company that does provide annual recurring revenue. One of the multiplication factors I look for is 10, which is a rough sort of estimate for a SaaS company. And then if you go to about 5, that's when it starts looking potentially like good value. So look at the annual recurring revenue for Vonex with a grain of salt. I'm not sure they should providing that because this is not a traditional company that gives that sort of information, annual recurring revenue information. One of the things I really like to do for a company that has a few verticals is just to see how each of the verticals are performing. And with Vonex, you have to go to their annual report, go through the notes after the release of all the financial statements, and you'll find a disaggregation of revenue which shows you where they are getting or deriving their revenue from. For instance, telephones, retail, $6 million in financial year 21 compared to $6.1 million in financial year 20. In wholesale, though, although it has increased from $301,000 to $2.3 million, internet's increased for both retail and wholesale. In fact, it's almost more than doubled for wholesale. They've also got the hardware part and the hosted PBX, and that's actually grown a little bit over the past financial year. So I do like to look at these or this sort of information. They've also got a geographic region. For instance, most of their revenue is derived in Australia. A little bit, only $40,000 is derived in the United States of America, but they are growing when it comes to revenue. And if you compare the retail to wholesale, it's almost in financial year 21 evenly split between the two. Before we have a look at Vonex's September quarterly report, which would be the first quarter for the financial year 22, which is going to go back 1 year in time to look at the first quarter of financial year 21 and just compare the two quarters, sort of a year-on-year comparison. Receipts to customers, $4.2 million, and they were almost operational cash flow positive, only operational cash flow negative by $481,000. And because they are bleeding a little bit of cash in the operations, bleeding a little bit of cash in their financing and investing activities, they did lose $800,000 of cash and finished this particular quarter with $4 million of cash. Now let's have a look how they performed in the most recent quarter. And receipts have grown to $7.1 million, but not only have receipts grown, but also costs have grown. Product manufacturing and operating costs have grown by about, I think it's about $1.2 million. Staff costs have increased, administration costs have increased, but receipts have grown at a quicker rate than the costs. So instead of being operational cash flow negative by about $400,000, now they're operational cash flow positive by $400,000. Now, they were quite active in their financing and investing activities, and that's why cash on hand for Vonex increased from $3.7 million to $10.3 million. They made a $22.1 million acquisition, and to fund that acquisition, they did a capital raising that raised $14 million. They also borrowed $16 million, and this is their first loan they've made in their history, it seems like, because they had 0 loans before this. Now they've got $16 million of loans. So all up, things are looking positive for Vonex. They are operational cash flow positive. They have a fair bit of cash on hand, but they also have a loan now. So things are moving in the direction for Vonex. So Vonex does provide annual recurring revenue information, and this is directly taken from one of their presentations, more than likely one of the most recent presentations, yes, the annual January meeting that was on the 29th of November 2021. So I'm going to humour Vonex and just look at this. And the one thing I am looking for here is growth in annual recurring revenue has been growing at a very slow rate if you take away the acquisitions. In fact, it's been growing at about $300,000 per quarter. So this is on a quarter per quarter basis. If you go back to the quarter 2, 2019, they had $8.1 million of annual recurring revenue. Seems like they made an acquisition between the second and third quarters of 2020 because we saw a massive jump from 9.7 million to 15.5 million. And then from that time to the most recent quarter, annual recurring revenue growing very, very slowly. In fact, it grew from 15.5 million to 18.4 million over 6 quarters. Not a significant growth in annual recurring revenue at all. But now it's up to 32 million, mostly because of an acquisition they made. So there is acquisitions here, but there is a little bit of organic growth going on for Vonex, and that is a good thing. But I would prefer this annual recurring revenue, even though I don't think they should be providing this. I would like that to be growing a little bit quicker than what I see here. So they are benefiting from acquisitions, but on occasion, acquisitions might harm a company, not benefit the company, particularly if they don't get any synergies, that sort of thing. We might see this company suffer from that in the long run. So just because they've made acquisitions doesn't mean that will be a good thing. I want to see some good organic growth in there. And even though we are seeing that, it's going at a very slow rate. And that anemic organic growth we have seen in Vonex's annual recurring revenue is replicated when we look at the cash receipts history for Vonex from when they listed on the ASX back in 2018. And from the June quarter 2018 to the March quarter 2020, receipts were growing but at a very slow rate. They grew from 2.2 million to 2.9 million. Then they made an acquisition, and all of a sudden receipts jumped up from 2.9 to 4.2. And then over a 5-quarter period, receipts were almost going sideways from 4.2 to 4.5. Then another acquisition saw the receipts jump up to 7.1 million. So overall, receipts are climbing here. But the main reason receipts are growing is because of acquisitions. There's a little bit of organic growth, but it's very anemic. And I would prefer the organic growth of this company to be a little bit stronger than what we're seeing here. On to looking at the charts for Vonex. The first one here is the weekly chart from when they listed on the ASX in 2018. And to be honest with you, this is not a good looking chart for any long-term shareholders of this company, particularly those who partook in the IPO, because the share price has actually fallen from then. In fact, that first week, there was a little bit of volatility around the share price because we see a fairly big range. In fact, during that first week, the share price ranged from a low of 12 cents to a high of about 22 cents. And then we just saw the share price just move sideways, and then it fell to about 6 cents or just under 6 cents during the COVID-19 financial panic. But there was significant interest in this company after the recovery from the COVID-19 financial panic. In fact, the share price improved from 6 cents to a high of 32 cents over an 8 to 9 month period. And that high was realized in February of this year. So that was about 10 months ago, 11 months ago. And we have seen the share price fall from that high in February by almost 66%. So a fair bit of negative sentiment in regards to Vonex right now. And the share price at 11 cents is at about, we'll say, over a year low. Last time we saw the share price this low was way back in August of 2020. So fair bit of negative sentiment just looking at this weekly chart. And I will not be surprised to see the share price fall even further from here. As we turn our attention to Vonex's daily chart here, which goes back to August of 2020. So this is including the period of time when the share price rose from 6 cents to a high of 32.5 cents. So there was a fair bit of interest in this company around then, and we know there was a fair bit of interest because there were peaks in volume. So I'm not sure what was happening during that period with Vonex. They could have been releasing some good news during that period, or it could have just been this overall positive sentiment in the market that could have been driving Vonex's share price higher. But from that peak in February of this year, that sentiment just shifted. It doesn't seem like there was any negative news that shifted that sentiment. Sometimes you will see that the interest in a company can just wane, and maybe that's what happened with Vonex during February and March this year, and that's why the share price fell from 32 cents all the way to 12.5 cents over about a 3-month period. And over the past 6 to 8 months, it does look like Vonex share price has been trading in this descending triangle. Every time the share price gets to about 11 cents, we've seen it 3 times over the past 6 months, the share price rebounds, but every time it rebounds, that rebound is weaker and weaker. So there's less interest in that rebound, and that's why you see the highs keep getting lower and lower, and that's the definition of a descending triangle. Most of the times, not always, but a lot of times, a descending triangle is a bearish signal, and we might be seeing the share price fall below that support level at 11 cents. But if the share price moves above that sloping top part of the triangle, that would be a bullish move. So at this point in time, I have no interest in taking a position in Vonex, looking at the chart, or even looking at their financial situation, unless they show me they can be continually cash flow positive on a quarterly basis. And if they do show the market that, they can become profitable, that could provide the catalyst or the impetus for the share price to break out into an uptrend. And that's exactly what I would be looking for Vonex. But at this point in time, I think it's quite important to remain patient when it comes to this company, just to see how the market and the company performs over the next 6 months. That's all I have for this video on Vonex. And in regards to the question, is this company amazingly cheap? I'd probably say no at this point in time. We do see receipts and revenue growing, but a lot of that growth is because of acquisitions. I would like to see a little bit more organic growth when it comes to the company. They do have that organic growth, but it's quite anemic. It is quite slow. And if we do start to see organic growth starting to increase, if the company can become operational cash flow positive on a continuous basis and profitable, we might see the fortunes of the share price turn around from what we've been seeing for the majority of 2021. If you have any questions about this company or any other company on the ASX, please leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.